Hi, and welcome back. We are continuing on with our illustrations of the accounting worksheet and completing the accounting worksheet. And essentially, that means completing the accounting cycle process at the end of the period. We started by bringing the general ledger balances into the adjusted trial balance. And we did that in a video. In the next video, we did the adjusting journal entries, and recall that involves assessing all the balances and seeing whether they are right. There's two reasons they might not have been right. There might be an error, or economic events may have occurred in those accounts due only to the passage of time. Hence, we record those in the adjusting journal entries, and we did so. We recorded the adjusting journal entries in the general journal, posted them to the general ledger, and that resulted in these adjusted trial balance ledger entry totals, balances. We verified everything is correct, and now we're going to prepare financial statements. Now you could make a column here that says financial statements and do both the balance sheet and the income statement simultaneously, but for illustration purposes, I went ahead and made two columns out of them. Okay, let's start with the income statement. The income statement is going to involve the temporary accounts. That's where we capture the revenues, expenses, gains, and losses that'll go on the income statement. So I've indicated them here in the red. And so now, and we're still going to use the debit and credit column in our worksheet. Of course, when we prepare the income statement proper, we're going to do it in a very standard form that the users are used to, and you'll see that in the next chapter when we study. The next two chapters, we will study the balance sheet, the income statement, and preparing those. And we'll see the format they take, where we take the balances from these columns, and then we prepare financial statements in professional form for the user community to digest and analyze. Okay, so here we go. And so our credit to sales revenue on the income statement is going to be $2,500. Our credit to rent revenue will be $300, and that will be the two revenues. So again, these are the temporary accounts, and we're summarizing them for the income statement. Our expenses, we're going to report cost of goods sold of $1,000. There is no salaries expense yet because we haven't hired anybody. The interest expense is $500. The depreciation expense is $100. Rent expense is $1,000. And then, so pre-tax income is $2,800 of revenue minus $2,600 of expenses, or $200, which led to income tax expense of $60. So what I've just done there is I've previewed what you're going to see when we prepare the income statement in proper form. Is we will get a net income before taxes subtotal, and then income tax expense, and then bottom line net income. Okay, so there's the numbers that will constitute the income statement. And net income there is 140. We'll put that over here, and I'll show you why. Because it's going to be relevant to retained earnings whenever we close the net income for the period to the retained earnings account. Okay, so on the balance sheet, we will have the permanent accounts. And these are those permanent balance sheet accounts. We will report cash of $132,600. We will report accounts receivable of $1,500. We will report bicycle inventory of $9,000. We will report prepaid rent of now $11,000. Equipment at cost of $12,000, less depreciation accumulated of $100. On the liability side, we will report accounts payable of $2,000, unearned rent revenue of $3,300, interest payable of $500, the bank note of $60,000, and income taxes payable of $60,000. On the equity side, common stock account will have a balance of $100,000 contributed capital by the owners. And then net income is going to be $140 when we close the net income to retained earnings. Okay, and so that's our balance sheet and income columns. And so put some totals in here. And then, of course, those don't equal because revenues exceeded expenses. So if you're one who likes balances, I don't care how you do it, you could put 140 here. And then you have 2,800 down here, 2,800 down here. And then in these columns, if you add those up, you're going to find that those totals are 166,100 and 166,100 for the debits and the credits on the balance sheet. And then at this point, we would prepare financial statements in proper form for issue to the users, such as the banks and the investors, the bondholders. Okay, and there's the information we'll put on the balance sheet and the income statement. And now the next step in the next video, we'll do the closing entries and close these revenues and expenses to retained earnings. All right, thank you for your attention. I hope that's pretty straightforward. And again, by the way, in the next chapters then, you'll see how we would use the information in these columns to prepare financial statements in proper form. All right, thank you. Have a great day, and I will see you in the video where we discuss the closing entries.